Michael, how you
So
doing, buddy?
pretty good. I saw it said fourth quarter. I didn't catch the dates though.
Oh, yeah. It is. So I'll pull it back up here. I think I still have the email up, but if not, I can pull it back up. Yeah. So it's let's do that. So it's September 12th to the 14th. So the 12th is the kind of like your fly-in date. It's a Friday. 13th, 14th. We should be done by midday on the 14th. So, um, yeah, so anybody who hasn't registered yet, once you click here, it'll bring you to just like a little fill out page. It'll ask you if you're going to attend the game or not. But just basic info. And then 7 days later, you'll get the agenda emailed to you too. So I was having fun with marketing, trying to get different stuff automated. So this is my first attempt at that. So more to come, I guess you'd say. But yeah, I would say we have about 14 people registered already. So sooner you register, the better. But so anyway, want to throw it out there before I run into any canned stuff to see um, if anybody has anything um, that you want to discuss. Nothing. Everyone just came here to listen to me talk, huh? Sorry.
Hey
Always.
Phil. Oh,
Always, Sherry. Nice to see you. So, John, what'd you want? What'd you want?
all right. Can you go over with the new product that you shared recently, the FNG, the annuity product, the guarantees,
The
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 guarantee,
guarantee.
yeah,
Go ahead. The
yeah, the
guaranteed
guaranteed
annuity.
7.2, yeah, the
Yeah,
7.2% compound roll-up rate.
sure. Yeah. So for those, and we're actually going to do some annuity training tomorrow too, just for everybody's, perspective. But there was a recent announcement that F&G has increased their withdrawal rates or their percentage rates on their income product. So I'm not a huge proponent of accumulation products from F&G just because of their rate integrity, but they have increased their opportunity from an income standpoint. Now, I will tell you right now, there are excellent marketing strategies with annuity companies to talk about, bonuses, rates, and all this other stuff. But in return, you have to also look at there's no such thing as a free lunch. So, for example's sake, like I'll just use Annuity Genius because it's easier for me to run that. Um, but if I wanted to, for example's sake, take a, Mr. 65-year-old in Tennessee, 65, and we'll just do 100,000, simple and easy, okay? So if I wanted to work this case, I would click here, and this is I'm not going to go through full-blown instructions on it because it's a different software, but it's so if I wanted to just go to the marketplace and actually look up like John, you're saying you want to understand the the rates for the guaranteed lifetime income. So you'll see here, if I want to view more for guaranteed income, I could just start out with all the filters, and you'll see the Safe Income Advantage is the product that they were talking about from that standpoint. So if I wanted to look at the annuity info for right now, you have the highlights of the product. So it's got, 10-year surrender schedule available pretty much everywhere except New York, like every place, it seems. Up to 2 mil withdrawals. So right now they're showing let's see, might be in riders. Yeah, 7.2 compound roll up. So the first 10 years. Okay. So the thing about that is that the fee is an average, 1.15, maybe a little higher. Most of them I see are between 1.1 and 1.2 from that standpoint. So benefit of this is the compound roll up as opposed to simple. interest roll-ups. So you do have a big perk from that standpoint. And I think that's one of the big reasons why I wanted to kind of share that from a marketing standpoint, because it shows that they're trying to be competitive with, for example's sake, the nationwide products and things like that. But I still always say, like, as you're going through these products, I will actually use the free software that you guys have from an income standpoint. So if we go to 3Mark, if we go to login, okay, so they have an income solver inside of here through Luma. So if I go to products and solutions and under annuities, okay, resources and quotes, it's not here. Luma, it's right there. So I want to open this up and I want to go to the starting income comparison. So here it will take all the information. I'm going to click on fixed index annuities because that's what we sell. I want to do that $100,000 that I mentioned in Tennessee. My client is 65, and let's say, for example's sake, they want to take income out starting at 75. Okay, so this will give you that 10-year roll up of the 7.2 compound. Okay, I'm going to hit submit. And the one thing I'm going to do real quick is I'm going to say that the income may reduce. No, because Corebridge has that little increase for like 10 years or so, and then it drops. So I want to take that out of the picture. Corebridge is still impactful here, but let's see where F and G is. They're not even on here. So that could be one of two things. So F&G might not have their software inside of Luma. So we're going to compare it right now to Global, which is giving you $17,000 in guaranteed income, followed by Corebridge at 16,150, and then Protective at 15,400. So I'm going to take the same example. I'm going to run the navigator here with lifetime income, 100,000, move money one time, and we said 75, so we're given the full 10 years. A-rated or better. And let's see what we got. So again, for those who are newer to annuities, there's two types. There's accumulation annuities and there's income. Income give you a fixed guaranteed rate over time. And yeah, so even here with the guaranteed income, they're still not even in the top three. You're all the way down here, or let's take it and move it to annual withdrawals. So nationwide, Delaware Life, Global Atlantic, North American, Athene, and then F&G is here. So the cool thing about this, though, is if I wanted to, for example's sake, take the top three and look at them from a comparison standpoint, I can actually see because not all products are created the same. Even though Nationwide might have the highest income, it might not tell the entire story. So if we open this up, and I like to look at the comparison page between the three. In this example, Nationwide is the best when it comes to income. However, I will challenge you with one thing here. If I was 65 years old, or yeah, 65 years old, and let's say I want to take income at 75. You have $18,203 a year versus $18,000. So we're talking literally a $202 difference. However, if I become chronically ill, I have a doubler effect of $36,000 at my fingertips, whereas Nationwide does not offer that assisted living 2 out of 6 ADL opportunity. So, Mr. and Mrs. Client, are you willing to sacrifice $200 a year, like $20 a month ish, for the opportunity to have double the income in case you become sick or ill. So someone did ask, is Annuity Genius a paid service? Yes, it is. It's about 165 a month. Normally it's about 250, but I have the for the Cadillac version. I have the Cadillac version, and because I bought the master license, I can offer it for 165. But as you can see here, it's worth its weight in gold. I've actually used this to help another one of my agents whose their client was taking income for 3 years, and we found another product that could give them better income, and we moved $1 million from one pocket to another pocket to give the client better income. Literally gave them a 50, $60,000 compensation too, and the client made out better. So and that was National Western Life. So we have National Western Life. I would have never thought to use National Western Life. However, when they came up on the charts, it would seem like the right thing to do for the client. So, yes, it is a pay service. That's why I did want to show you the 3 mark one for the income solves. But if you'll notice here, it doesn't even have F&G on it. So, from the example standpoint of what John was asking for to see how F&G works, they have it. It's a great marketing piece, but I always look at the facts of when the client wants to take out income. And the cool thing is that, for anybody on this call, anybody who works, in the Valor brand, I'm here to support you and help you any way that I can. So if you want these, illustration requests, you can definitely do that. I can run them for you, see what makes sense. And then if you want to modify it, so it's just one carrier illustration, go to the carrier site and modify it. But I pay for this stuff to get speed to issue out for agents. And for comparison's sake, because you can see here, they got pretty much everybody. Now, the other thing too, just to keep in mind, is a lot of the business goes through 3 mark because we do hierarchy standpoints, but through exceptions, we do have access to the Annexus products, so nationwide products, Delaware Life, we have those as well. They're not really much of a hierarchical kind of process because a lot of these carriers don't have sublevels. But we can talk about through exception getting people additional contracts if needed or necessary. So just want to kind of share that for the executive or affiliates on here too. If you roll directly to me as an individual agent, fire away. We're good. So, but yeah, the annuity side, you're going to see a lot of changes that happen all the time because everyone's fighting to get a certain market share. Now, I will give credit to Nationwide. They did send out a flyer recently that said that if interest rates drop, keep in mind these guaranteed incomes will drop too. They are interest rate sensitive. So if you have clients out right now that you're having conversations around guaranteed income, the sooner the better. And I'm not trying to be a fear monger, but as we all know, Trump is trying to knock the interest rates down, and that is not good for our business from an annuity standpoint. So we've had a pretty big high over the last couple of years because the interest rates have been high. So I would say if you have situations where you're talking to people about guaranteed income, I know Medicare enrollment season is coming up. So those who are doing the Medicare stuff, usually you're talking to the right clientele who might have retirement money. So it's a good segue to have the conversation. I know you can't have it in the same conversation, but here's what else I do to help people, and then set up your separate appointments so you stay, regulated and everything. But I often say that annuities are the hidden gem, especially when you're dealing with people of older age. So, 50s and up is a conversation around guaranteed income. What are you planning on doing for retirement? So,
So, question.
yeah,
You have guaranteed and you have hypothetical next to it with so some of them say NA.
yep,
Um,
we're all the
I know
same.
some annuities have the guaranteed roll-up rate, and some annuities, like it says, assuming a 4.5% return. Um, how would an agent quickly know,
if the income is actually guaranteed or it's a hypothetical based on a return.
Yeah, so anytime you open these reports, so like if I go back to, well, let's just take one carrier for example's sake. Um, we'll open this up. So, God, what's wrong with me today? Annuity info, illustrate. So if I were to do this, and let's just say exclude, well, 100% in that, so that's fine, whatever. Just for example's sake, bonus, we have a single rider, not joint life, no other withdrawals. Let me go back. I forgot one thing. Start income at 75. So next step, you'll see here, when people talk about the hypotheticals, guaranteed rates, I always show the 0% column first and foremost. Like, a lot of people like to skip over that, but in my opinion, that's probably your bread and butter right there. Because, like I said, if you talk to anybody about guaranteed income and you talk about the situation at hand, this is probably the most important part. You're in your 60s. Do you really want to take risk and futz around with your retirement, or do you want to have your own private pension plan? So that's why I look at the 0%. But as you can see, 15,876, and if you had an average rate of return of the highest cap rate they can give, which is the S&P, it's the same thing. So it's going to give you the better of the roll up or the benefit base, which, at this point now at year 10 is 7.35. So it's gone up, but you'll see that the benefit base is going to be higher than the actual accumulation of the product, which is here. And the reason why is there's fees attached to guarantees. So 95% of the time, or I shouldn't say that. There are carriers that have an increasing option. They're a different type of annuity. You can do that, but it is market based. I'll use Athene as an example. They have on their Pro Bonus, I think it is. I can't remember which one, or the Agility. I think it's the Agility.
Ability. Yeah.
Yeah. So here, let's say this was the interest rate and it one and is 15,000 for 2 years. Then it jumps up to like 30,000, then 40,000 and goes up and up and up. But on the guaranteed side, it might say like 4,000. So are you really relying on the market performance of a company that can throttle credit rates? That's the part that I always worry about. So some people will show increasing incomes to make the product sexier than it is, but I'm a no frills guy, if you couldn't tell at this point. So I think from that standpoint, having just more of a foundation of guarantees, because like you'll see here, 100,000. So this person just has to live what, 15, 30, 60, 90 to average age of mortality, 81, 82, to get their 100,000 and then some. But if they die along the way, there's a death benefit. Yes, there's fees attached to it. This is the guaranteed section. So it goes a little higher with market performance and market returns. But there's a death benefit for what's not used. So a lot of people are like, oh, well, if I die, I don't get the benefit. Well, there is some death benefit that will pay out. It's not just, tough cookies, like the olden days of annuitizing annuities. So that's how I do it. I always look at the 0% column to make sure everything is accurate from that standpoint. But that's a good question.
Yeah. I
Um,
think you got to know how you came up with that number.
Yeah, yeah, the benefit base and everything, understanding all of that is a huge difference because and John, I'll pick on you because we have similar friends in different organizations. And Mike, you probably know this too, is when people will talk about, oh, get a 30% bonus with a 9.5% roll-up rate. It's like,
Uh,
okay, well, if someone wants accumulation, you're killing them. You're going to hit them with
yeah.
fees, and it's not the right objective. So we have to make sure the objectives are accurate, with everything that we talk about and look at. So that's kind of my soapbox spiel in
You
regards to
mentioned
the annuities here.
you mentioned the agility. That's one expensive bonus.
Right?
That's
Right?
horrible. Uh,
Golly. But
I
the
so
pro the problem
you want to hear a
is you
story?
have, yeah, what's up?
Okay, so this is also just so people don't screw them. Not only do you screw your client, but you actually screw yourself too. And this guy had a 50-year-old client. I met him. I was thinking about recruiting him. He was silly though, but he was bragging how he got his client the bonus with Athene, which of course is only a bonus you can take out on income, right? It's not a cash bonus. And so I said, well, you understand, number one, it's not a real bonus. It's just, if, by the way, if you can only take it out on income and other companies give you income, then did you really get a bonus? No, right? So it's just a marketing tactic. The second thing is he put his client in the agility, um, and we looked at the participation rates compared to the performance elite, half, half
Easily.
at best, right? So the client's getting half the performance. They're locked into this product. The guy made one sale of 250,000 on the annuity. But what I said was, look, if your client could have got double the growth for the next 7 years, and guess what you could have done after 7 years? You could have rolled it over again. The client would have grown their money much more effectively.
Mhm.
But not only that, you would have had a second rollover, not of 250, by the way, maybe of 400,000.
Yeah.
So not only did you cost your client all that growth, you cost yourself another $400,000 rollover in the future.
Yeah.
Literally
Now I've
screwed
done
your client and yourself.
Now, I've done some analysis too, like for example's sake, if you've ever talked to a client where it's like they're 50 and they do a roll up or whatever, like a guaranteed one, not a agility product. And I'm like, all right, well, let's look at if you did the guarantee now and you take income at 65, or you do 7 or 10 year annuity and then the guarantee after that, the guarantee roll up of age 50 still actually perform better than doing income. But once again, it's all, like if I can get better performance or a better product comes out later with a bonus and a roll up compared to what we have today, then we just don't know. So I think, and that leads to the great point is, depending on the age of the client, I always go back to give option A or option B because if you just give them one option and they don't like it, then they're going to walk. But if you have two options, that you've taken away the most difficult question, am I going to buy this? Now the easy question for them to answer is A or B. So you're actually helping yourself make the sale by offering two options. But they say like if you offer three options, now you create confusion and the client will have to think about it. So there's a magic number and it really is two, like A or B, one or two versus one, two, and three, because then they're going to get confused. They'll want to talk to someone else and kind of validate as opposed to you just giving them two options. So a little, you know, I guess you'd say sales tactic 101 here, this evening tonight too. I'll give you that one for free. So but yeah, good question. I know, John, that was a long-winded response for can we talk about the F&G bonus, but was that helpful?
Thank you, Phil.
No problem, buddy. It's like I'm always a fan of transparency, like figuring out what's best for the client and working for a carrier for 15 years, you see all the marketing tactics, you see that everybody is looking to hit certain cells. On the life insurance side, National Life Group focused heavily on juveniles because if juveniles are going to get policies, they look the best in the juvenile space. Well, people don't want to get two policies like husband and wife don't want to get policies from a different carrier than what their kids are getting. So oftentimes they find they get the whole family with National Life Group. So some people will work on certain cells that they find more profitable for their organization, and that's why you'll see like that's why I peel back the onion. Like I don't want to just immediately say, oh, this company has a 7.2 roll up, then they're going to be the best one when proof is in the pudding. Every client's different. And, doing this for 18 years, almost 19 now, I can say without a shadow of a doubt over that whole time, not one client has ever been the same. And I think that's a good thing. It keeps us on our toes as products change, as the industry changes and everything. We always have to stay educated on what we're doing, you know? So,
Yeah.
um,
And I think the other thing to remember is the roll-up rate doesn't even matter if the payout factor is super low because it's a
yep.
whole formula, right? The whole formula has to make sense, not just one piece of it. So,
Yeah. I think the big play, and a lot of people don't realize this, but the real reason why the bonuses are there is to move money from an old annuity to a new annuity. That's really it. A lot of the carriers have put these bonuses out so you have the ability to move money. And not a lot of people realize that when you move money, you're thinking you're moving them to a better product, but is it a better product or a better illustration? So a lot of times there's scrutiny, especially if you're doing an income product to another income product, because of the fact that there's rider fees, lower participation rates, and a lot of factors involved. That's why they have you fill out this giant form. I know, John, you went through this with one of your clients, where they didn't want a guaranteed income rider anymore. They wanted to go to cash and accumulation. But the carriers get prickly about that too. So the carrier, even though the client even might write a letter saying, hey, I want to have this type of annuity, they'll still block it. So suitability can be a big pain. Rasana, I saw you came off mute. Did you have a question?
Yes, yes. The fees that you talked about, the
Yep.
rider fee, right?
Yep.
When these guys are talking about guaranteed lifetime income, the income number that they have shown, is it after deducting the fee or still, the fees will be
The
deducted?
Yeah, the fee is taken out of the cash value. So if you have $100,000, the 1.1 or
Mm-hmm.
1.15% is going to always come from the cash value. But it's a fee to give you the guarantees. So the best way I put it, and I learned this from the annuity wholesaler from AIG, is think of it like monopoly money, or I like to call it Mickey bucks. Like you go to Disney and you buy the Mickey bucks. I don't know if they still have those, but if you go to buy the Mickey bucks, you exchange a dollar for a Mickey dollar, but you can only use it inside of the walls of Disney. So same thing here, you're giving them cash, your
Mm-hmm.
actual cash, and they're giving you Mickey bucks or nationwide bucks to use inside of nationwide. So that's why like they're giving you a benefit base to grow, but on the same token, oh, thanks, Sherry. Thanks for coming on. But yeah, the big thing is that they're having it grow because they know they're locking you in to their company. So now they can use that money for whatever they want to use it for, say investing or other things where you're going to get a benefit from them of guaranteed income. So it's supposed to be a win-win. Um, but what's always interesting about the industry, so I don't know if you guys have known this or not, but um, for the longest time, you couldn't sell an annuity and a life insurance policy with the same company
Oh,
because
really?
you didn't know that.
No.
So back in the day, it was a big issue because life insurance, they want you to live a long time to avoid the payout or get more
Mm-hmm.
premium in. Annuities in the olden days before these income riders, they want you to die quicker because then the house can win. So they're counterproductive. And so if someone was doing an annuity funded life where they were taking the income from this because they didn't need it and moving it to a life insurance
Mm-hmm.
payment, it's like you lose on both ends or the house doesn't win. So it's changed now though, from because the riders have changed it as opposed to in the past where people would say, I want to annuitize my annuity with a 10-year period certain. So if I died in the first 10 years, they're still going to pay out for 10 years total. But if I died after 10 years, then they're just gonna say, all right, that's it. And they'll call it. So the rider has actually helped protect the client and still provide a value because you're not truly annuitizing the contract. So there's a little history for you guys there too. I feel like I'm like, gather around kids, we're gonna tell you a story of the olden days of annuities. But great questions. And yeah, it's when you see the illustrations, you assume that it's year end values and the fees have been taken out already. So that goes the same with life insurance because as we know, life insurance they deduct, cost of insurance actually on a monthly basis. So even the illustrations that you have, they're not going to be like I used to have guys who would pull up Excel sheets and say the numbers aren't matching. And I was like, they're never going to match because it's when interest gets pulled from it to when it's credited, and you just can't do that in an Excel sheet. I value anybody who tries to do it on an Excel sheet. However, there are some very funky algorithms to the insurance companies. That's why actuaries get paid pretty well, and they have to go through a lot to get the actuary degree. So.
Can you say non-compliant anyway?
No, yeah, yeah, right. Well, yes, that too, but they were trying to find it from a point of clarity. Like they wanted to make sure that they understood how the product works. It's that engineer mindset, and it's great. Like I always say, I'm always for people who are trying to seek to understand. But in the industry, especially for our products, because there's fees taken out at certain times, it's never going to match up as much as we want it to. So that's always the funky part of the system and situation. So, um, any other questions on this? And again, just so you guys know, tomorrow 4 o'clock, I am going to kind of go over a deep dive of annuities, give some examples again, and stuff like this. And if you did miss it, we do have a pretty cool income annuity that we have partnered with another organization on. It's actually one of a kind. Um, where you start out with a point-to-point annuity and you have the option to extend. And if you're, let's say 48% is the starting participation rate on the S&P, a year from now, the 48% goes to 50% and you choose to extend it, they retro that 50% back to the first year as well. So you actually, the longer you extend, the higher participation rate you can get. So if the market goes down, there's 90% of that value is protected. So worst case, you have 90%, protected from whatever happened. So if you like rolling the dice, like me, I like playing craps, but when you have your number or your point set, and then all of a sudden that seven hits, the house takes all your money. This time the house is giving you 90% back of what you bet. So a pretty cool accumulation annuity that's out there. And we do have that if you want to take a look at the launch of that on the YouTube channel. So it is right there with this very surprised looking lady on the annuity training. So we'll encourage you to look at that. And if you want to get appointed for that contract, just let me know. Um, so any other questions? I know we got probably about 15 minutes left, unless some major topic comes up. But any questions at all? Or I could, dive into something that's pretty minor but simple to kind of look at too. Nothing. All right. So let's kind of do something here real quick. What I want to do is share with you on the life side one of the value pieces that you guys probably have seen, but just still, have a minor understanding towards. And I think it's important to kind of overemphasize is on the life insurance. So we're switching gears to death, not retirement. Okay. On the 3Mark portal, just understanding the resources that you have. There are a lot of people, and I don't fault anybody for this, but they stick with the carrier they know best, and they stick with that until they give a bad offer, and then they complain to try and get the better offer. Again, I'm all for people, having a go-to carrier or go-to carriers, but some of the resources you have available here in the X-ray portal are invaluable. So if you've never used the X-ray portal, we've had cases that were pulled back due to a bad offer, and we send them off to Karen, who is the case manager, to fire them off. And I use Ms. Baker as an example because she had a pretty mean history, so to speak, of things. And we send it out to all the carriers, and the carriers come back with their offers. Okay. So you'll see table 4. You'll see table 6, table 4 again, 6, 6. So what does this tell you? Aside from the fact she's not healthy, okay? You'll see that the industry mostly agrees with roughly a table 6 rating for the most part for this client, okay? Understand that when we do any type of life insurance sales solutions and opportunities, you're going to look at two things: pricing of the product and underwriting. And unfortunately, a lot of times people have lenient underwriting, have expensive pricing. You'll see that a lot of times, some other multi-level marketing organizations overly use the Mutual of Omaha IUL Express because it's non-medical. It's actually a table 1 rating. So if you have a preferred plus and you're giving them a table 1 because of convenience, you're doing a disservice to the customer. So what I look at is if you have your bell cow carrier. So I always, talk about Corebridge because that's my alma mater, right? The QOL product is a great story. I still think it's one of the best in the industry. But they have a lot when it comes to pricing. They hold very sacred, so they can be a little stricter on other things. So if you get a bad offer, you can reply back to your case manager, say, hey, can we send this out to market to shop it? And if they have all the details, then they will put together a little sheet to send out as an informal quote to all the other carriers. Once you get these back, the next step is actually taking that and running the illustration for what you're looking for to see which one makes sense. Now, in the past, I would known people to submit applications with 2 carriers at the same time. Why is that bad? You're getting 2 MIB hits, confusion with the carrier, and if you often send an application to 2 carriers at the same time and you constantly close out this one, even though they're insurable, they can cancel your appointment because you're giving them bad business or no business at all. So they look at that stuff too from an agent standpoint. But then on top of that too, the clients have an MIB history and you're just jacking it by sending it to multiple places. So what I always tell people is if you think the client's perfectly healthy or they lie and they say they're healthy and we know they're not, and they come back with a bad rating, you can send it to X-ray and they'll shop the market for you. Then at that point, you can go back to your client with 2 options. Once again, 2. One, hey, Mr. and Mrs. Client, just wanted to let you know, or Mrs. Client in this case, just wanted to let you know that, so-and-so carrier offered you a table 6. Well, we scoured the market and saw that everyone kind of falls in line with that. And the pricing from what they're giving you is actually accurate in the industry and still a decent price. I think we should lock it in and make sure you're okay. Okay. Option 2, hey, we ran the market. Looks like this company gave you a decline, but we can actually get you offers from other carriers. So they might be a little strict with their underwriting, but we found some more lenient carriers. And in this case, table 6 from North American was actually the most cost efficient. So it did beat out Prudential's table 4. Prudential does take on a lot of higher risk. So when you run through X-ray, it'll give you a whole slew of carriers and the offers that they're going to provide for you to give the best value to your customer. So if you were doing a brand new case with this, so let's see if, yeah, so I was just doing one for funsies. I didn't submit it, but let's say it was Phil Resch and you put the info in. So term product, 20-year, a mil. Here's a trick of the trade. No carrier will informally look at a life insurance policy on term for under $1 million. Okay. So if you say, hey, I want to put in an X-ray for make sure it's 1 million, otherwise you might miss out on some carriers. If it's permanent, it has to be 250 or higher. Okay, so keep that under your belt. So we put info in, product type, and then we go to next section. Brings you to physical build, 6'1". I wish I was 225. And so then we keep moving. Tobacco products, if you said yes, then it would trigger some more questions. Family history, anyone have cancer, heart attack that they passed away from? So if they said yes. Diagnosed, yes. Did they pass away from it? So it's just looking for family history because some carriers are more in depth with family history. Um, if you don't know the blood pressure, systolic and diastolic, that's fine. Blood pressure medication, if they don't give you any, that's fine. You could just hit next section. Because remember, and I always tell people this is garbage in, garbage out. So if you're giving bad information, they give you a preferred plus tentatively, then you submit to them saying, hey, the prequal said this. They'd be like, dude, you didn't tell us about the heart attack that they had, the diabetes that they have. So the more information you have here, the more details you can give, the better the response you'll get from the carriers. So likely either you don't waste your time in submitting an application you know they're not going to take in hopes for the best, or they'll see the pricing and they're prepared for it and maybe they come back better. Who knows? The same thing, cholesterol. The big one really is not this, not avocations, is here. So the reason why I was showing like a table 2 rating and things like that is because I stated I got diabetes in 2019. And then if I go to the next section, it'll start asking me about certain things like the A1C levels. So those of you of Indian descent, I've worked with Indians for 8 years. There's a touch of the sugar going rampant in that industry, or that race. And it just seems that this is always a question I ask. And a lot of times to come back, oh, I got 6.2, I'm not diabetic. In the eyes of the insurance company, you're diabetic. So if it's under 6, you got a shot at non-diabetics, but if it's over 6, the carriers will consider you diabetic. So asking these questions can help figure out what type of insulin usage. If you need to add extra info, you can put it in here and pile it in. Then what happens is you go to the case summary. It'll put everything in one spot. You can still add additional info here. Like if on that page with the medical conditions, it didn't have a medical condition that you wanted to use, say it was something very rare or different, then you can put it in here and then it'll add to the case notes. Because in the next section here, if I go to messaging, I can send it to Karen, who's my case manager, hit done, and then she'll get that to fire it off to all the carriers to get those tentative offers. So this is a huge, huge benefit that is free for you guys to use to help you find the right fit for the right clients so you get it done right the first time. So anyone have any questions on this? Quiet group tonight. It's okay. Share with you one last thing, and then if there's no other questions, we'll call it a night. But I want to show you something cool. So Valor Financial Specialist website, okay? We have updated it, make it a little prettier. Got that Nashville vibe for obvious reasons. Actually, here's the UBS tower where we'll be doing our event. So that's really funny. I didn't even realize that. So got some information here. I want to share with you if you are looking to submit quotes. We have under the life division, if you scroll all the way down, there is a quote section, quote requests. Okay. This will soon be its own hyperlink. So if you click on, say, term life, you'll see agent name, email, full name here, date of birth. Right now, they're asking for it like this. So I'm 1981, 12/22. So that's my date of birth. I'm going to get it fixed so you can do date of birth or age. But if you wanted to submit a quote request, I would get a notification. I'd run the quote and send it your way. Eventually, this will come up as a hyperlink for quotes.valorfs.com. That's just not ready yet. If you want to do appointments with me, I do have that set up as a hyperlink. So appointments.valorfs.com. And if you want to do contracting, so if you are new to working with Valor, contracting.valorfs.com will start you through the process. It'll also get you linked into our newsletter. And, we have 3 separate lines that you can run through. Last but not least, to kind of go back to the website, some of the stuff that we're working on right now is you'll hit this advisor login and you can connect it with Google. So I have it under my fill at Valor FS. I'm going to go in, and this is the advisor hub that we're working on. Okay. So you'll be able to request contracts. So requesting contracts for life and annuity. This is the 3-mark sure I'll see. This is the new annuity for the accumulation with the extended par rates. A Nexus, if you need that, you need special authorization or approval. We also have health contracts through Messer. So we're going to really build this out, running quotes. We're going to have a tech stack, so how to get directly to WinFlex. I've already paid WinFlex, so we're going to have a single sign-on for that. Annuities Genius Insight, which is subscription based. iPipeline, we're going to have that as well for term quotes. So in about, I want to say a month or two, I'm going to put the investment in to have iPipeline on here, as well as submitting business. So we'll have our own iGo, iPipeline forms, Firelight, Smart Office. So we're going to make this more encompassing. So you have a one-stop shop for pretty much everything. So we're working on a lot of this. Not everything is fully set up yet, but if you'd like to take a look at it, tinker around, we just have to approve you. So if you do advisor login and you use a Google or whatever you want to create from a login standpoint, we'll get you hooked up in here and you can take a look around and kind of tinker around. But this is going to be continue to be built over the year. And I wanted to kind of share that with you guys here tonight. So usually for those who show up, usually there's a couple extra nuggets and things like that to always share. So yeah. That being said, anybody have any additional questions? Was this good stuff? All right, I got a clappy. I like clapping.
Is there anything that's not going to be in there that maybe we have somewhere else, or is everything pretty much in there?
I would say we should have everything in here. If you don't see it and you want it, then we'll look and see where it could fit. I want to keep the design as simple as possible, so I integrate a lot of the stuff from the 3-mark portal here. So we should have a login for X-ray and telesheets. It's not ready yet, but like I said, some of the stuff that we're looking to do, integration and stuff like that. So we'll continue to build it out. And the big thing too is like communities. So a lot of people do like Michael, you do it, the Go collab. So instead of me just doing the Go collab, I want the Valor community to just go to the, life insurance alternative assets. So we'll continue to start using this a little bit more. And so instead of trying to build out a community on Go collab, we'll just have it set up through the life insurance and alternative assets page. So that way it can be easier. Lyft we have through Go Collab. So our marketing team with their CRM stuff, they have their own community through Go Collab. But I was like, trying to watch people do it like I've tried it. Carson Porter, if you guys know him, he's tried it, and you just don't really get a lot of engagement or activity. So I said, screw it. People check the Facebook more than they check the Go collabs. So, that's why I have that for the community there. And we'll have stuff in here too. Like I'm working on a couple things. So um learning management tool system and stuff like that. So this will continue to be modified and grow and stuff like that. I'm a big nerd, so I like tech. So, but yeah, if there's something specific that you wanted, we can always kind of dive in, or if again, thinking from a national perspective, what makes sense, we can definitely talk about it. So not a problem at all. All right, guys. Well, we'll call it a night. I want to say thank you. We'll have another one next week. Same bat time, same bat channel. I'll just be in a hotel, so I'm going to be in Dallas. But looking forward to the conversations. Then Thursday, tomorrow, we're going to be talking about annuities more in depth, just a little bit more baseline and conversation piece, and some illustration designs and stuff like that too. So. Thank you guys for jumping in tonight. Look forward to future conversations and have a great night.
Thank you, Phil.
Thank you, Phil. Okay.
See you guys.